LTC Properties Stock, ticker symbol LTC. This stock is down 2% year to date, underperforming the overall market. And on the 15th of February, LTC presented earnings with a miss on FFO but a beat on revenue. And most people love LTC stock because of the monthly dividends. And I understand why, with dividend yield at 7.25%. However, they didn't grow the dividends in the past few years. And with the stock coming down a lot lately and the earnings just released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does LTC do? LTC Properties is a healthcare facility real estate investment trust. The company operates one segment that works to invest in healthcare facilities through mortgage loans, property lease transactions and other investments. When we dive in the earnings report, we see that net income has increased a significant amount year over year. It was reported at 28 million versus 17.8 million in 2022. However, one of the most important numbers, the FFO, has decreased year over year, so this worries me a little bit. We see revenue coming down a little bit year over year, which also worries me, especially since the total expense is increasing big time. And the main reason why net income increased is because of the gain on sale of real estate. To me, this doesn't look really good, to be honest. The thing that I do like is the fact that LTC has almost double the amount of assets versus liabilities. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. LTC is a 1.3 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at 12.4, indicating they might be undervalued. Later in this video I will show you my 3 price targets for LTC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 197 million, and in this graph we see that revenue went up in the long run. For a REIT, this looks pretty steady and consistent, besides the lockdown periods of course. We see that margins are going up and down quite a lot in the long run. Most recently they started to increase again, and it would be nice if they can sustain current levels. EPS is going up in the long run. It's not really steady and consistent, but that's very common for a REIT. Analysis expected in the coming 2 years EPS will decrease, which is really sad to see. And for the revenue it is also not looking any good, with almost no growth expectations in 2024 and only 4% growth in 2025. Return on assets is sitting at 5.8%, which is a decent number for a REIT. Return on equity is looking really good, and the most important number, return on invested capital, is sitting at 4.4%, which is again a low number, but it is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 13, which is way too high in my opinion. This could be a potential red flag to me, especially since it's increasing in the long run. Right now LTC has 891 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 20 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a really great thing, but it's not really steady and consistent. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7.25%, which is a great number. Annual payout is at $2.28 and payout ratio is at 86%, which is above the average for REITs. And keep in mind, LTC pays a monthly dividend instead of a quarterly dividend. The 5-year growth rate is sitting at 3.71%, but they have no consecutive years of dividend increases. And here we see the dividends paid since 2012. They used to increase the dividends at a decent rate. However, since 2019 they stopped increasing the dividends, which is really sad. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at only a few cents a year. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added DHC and MPW. On the 5-year chart we see that LTC underperformed the S&P 500 with a big difference. LTC returned -6%, while the S&P 500 is sitting at 97%. And keep in mind this is including dividends. Both competitors are looking really bad. On the 1-year chart it looks pretty interesting with DHC returning 190%, while the S&P 500 is sitting at 29%. Both LTC and MPW are massively underperforming again. On the 6-month chart it is again the S&P 500 that is beating all stocks in this list. On the 1-month chart it is MPW that is having the highest return with 30%, followed by DHC with 10%. LTC isn't looking any good. So bottom line, LTC underperformed the S&P 500 in the long term and in the short term. So could this be the perfect time to buy LTC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 43, 45 and 47. And for the free cash flow margin I'm putting in 50, 52 and 54. For the PE ratio I'm putting in 12, 13 and 14. And for the price to free cash flow I'm putting in the same numbers. My desired annual return is 15% since I'm getting an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. And right now LTC stock is at $31.7. I hit analyze and we only see red numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $18. We have a mid price target of $22 and we have a high price target of $27. And to me the mid price target is the most justified here, indicating that this stock is overvalued based on these numbers. My final conclusion on this stock is that they have an interesting niche focus. However, the company is performing very poorly in 2023 and the coming years I expect that this will be the standard. Most fundamentals look pretty decent, but the revenue growth, current ratio and decreasing FFO look terrible to me. And these are one of the most important numbers with REITs. From a dividend point of view, things look pretty good, but again the dividend isn't really growing. And from a value point of view, I'm also not really excited since they look overvalued to me. So for now I'm skipping on this stock, but I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.